Namaskar. Myself, Mr. Ganeshan K, Assistant Professor of Commerce, Government First Aid College, Ramnagara. Welcome to the present session. Subject Corporate Accounting, topic Goodwill. Under this session, we are going to discuss about annuity method of valuation of goodwill and problems on annuity method. We have discussed already in our earlier session about simple average profit method, weighted average profit method, super profit method, capitalization method. Now, in this session, we are going to discuss about annuity method. See, what is annuity? Annuity in layman language refers to a series of periodic payments made to a person in his entire life tenure. Annuity is synonymously used under financial management, but however, even for the purpose of calculation of goodwill, we are adapting this annuity. How to calculate goodwill under annuity method? I will show you in a simple manner. Goodwill is equal to super profit into annuity value of ₹1. ಅಂದ್ರೆ ಇಲ್ಲಿ ಸೂಪರ್ ಪ್ರಾಫಿಟ್ ಪ್ರಾಬ್ಲಮ್ ಅನ್ನು ಕೊಟ್ಟಿರ್ತಾರೆ. ಸೂಪರ್ ಪ್ರಾಫಿಟ್ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕು. ಸೂಪರ್ ಪ್ರಾಫಿಟ್ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿದ್ಮೇಲೆ annuity value, we will not calculate annuity value. Annuity value will be given in the problem. Okay. So let me say 3.78, 3.41, 3.62 like that, right? You multiply that annuity value with that super profit, whatever the amount we get, that is goodwill. But children, now let me discuss about annuity method. Under this method, goodwill is calculated by taking average super profit as a value of an annuity over a certain number of years. The present value of this annuity is computed by discounting at the given rate of interest, that is normal rate of return. The discounted present value of annuity is the value of goodwill. The value of annuity for ₹1 can be known by reference to annuity table. Goodwill is calculated with the help of the following formula. Goodwill is equal to super profit into annuity value of ₹1. So, now you know goodwill is equal to the product of super profit into product of super profit and annuity value as stated with reference to annuity table. ನಮ್ಗೆ ಯಾವ annuity table ಎಕ್ಸಾಮಿನೇಷನ್ ಕೊಟ್ಟಿರೋದಿಲ್ಲ ಆಯ್ತಾ, ಪ್ರಾಬ್ಲಮ್ ಅಲ್ಲೇ ಕೊಟ್ಟಿರ್ತಾರೆ annuity ವ್ಯಾಲ್ಯೂ ಎಷ್ಟು ಅಂತ, ಅದನ್ನ ತಗೊಂಡು ಸೂಪರ್ ಪ್ರಾಫಿಟ್ ಇಂದ ಮಲ್ಟಿಪ್ಲಿಕೇಶನ್ ಮಾಡ್ತಕ್ಕಂಥದ್ದು. ಹಾಗಾದ್ರೆ ಮಕ್ಕಳೇ, ನಾವು ಈಗೇನ್ ಮಾಡೋಣ ಅಂದ್ರೆ ಪ್ರಾಬ್ಲಮ್ ನ ನಾವೊಂದು ಚರ್ಚೆ ಮಾಡೋಣ. Let me discuss a problem here. The net profit of a business after providing for taxation for the past 5 years are ₹40,000, ₹42,000, ₹45,000, ₹47,000 and ₹46,000. ನೀವು ಅಬ್ಸರ್ವ್ ಮಾಡಬಹುದು ಮಕ್ಕಳೇ, ಪ್ಲೀಸ್ ಅಬ್ಸರ್ವ್ ಇಟ್. 40,000, 42,000, 45,000, 47,000, 46,000. ಪ್ರಾಫಿಟ್ ಏನಾಗಿದೆ ಹೇಳಿ ನೋಡೋಣ. ಪ್ರಾಫಿಟ್ಸ್ ಆರ್ ಫ್ಲಕ್ಚುಯೇಟ್ ಆದ್ರೆ ಏನ್ ಮಾಡ್ಬೇಕ್ರೆ, ವಿ ಆರ್ ಅಡಾಪ್ಟಿಂಗ್ ವಾಟ್ ಅವರೇಜ್ ಪ್ರಾಫಿಟ್ ಮೆಥಡ್. ಅರ್ಥ ಮಾಡ್ಕೊಳ್ಳಿ. ಇನ್ಕ್ರೀಸ್ ಆಗಿದ್ರೆ ಪ್ರತಿ ವರ್ಷ ಇನ್ಕ್ರೀಸ್ ಆಗಿ ಹೋಗಿದೆ ಪ್ರಾಫಿಟ್, we are adapting what weighted average profit method. Decrease ಆಗಿದ್ರೆ weighted average profit method. So fluctuate ಆದ್ರೆ, so we are adapting what a simple average profit method. The capital employed in the business is ₹4 lakh on which a reasonable rate of return of 10% is expected. It is expected that the company will be able to maintain its super profit for the next 5 years. Calculate the value of goodwill of the business on the basis of A, 5 years purchase of super profit, B, annuity of super profit. Taking the present value of an annuity of ₹1 for 5 years at 10% interest is ₹3.78, right? Now, let us calculate goodwill under super profit method. Step number 1, calculation of average profit. What is average profit? Average profit is equal to total profit divided by number of years. Since the profits are fluctuating year by year, no question of increasing trend or decreasing trend, we are adapting average profit method. Accordingly, 40,000 plus 42,000 plus 45,000 plus 47,000 plus 46,000 divided by 5, we are getting 44,000. Next, we are calculating what? Normal profit. Normal profit is equal to average capital employed into normal rate of return. So, what is the, I can say what is the average capital employed? Average capital employed given in the problem. Please observe, my dear students, the capital employed in the business is rupees 4 lakh, on which a reasonable rate of return of 10% is expected. So, now 4 lakh divided by 4 lakh divided by 100 into 10, or 4 lakh into 10 by what? 100. Means average capital employed is what? 4 lakh. What is the normal rate of return? 10%. 10% means 10 by 100. We are getting 40,000. Now, we are calculating super profit. Super profit is equal to average profit minus what? Normal profit. For calculating normal profit, what we require to tell me is the average capital employed. So, what is normal profit? Normal profit is equal to average capital employed into normal rate of return. Super profit is equal to average profit minus normal profit. So, what is average profit? 44,000. What is the normal profit? 40,000. So, difference will be 4,000. 4,000 is nothing but super profit. Let us calculate goodwill. And the super profit method, goodwill is equal to super profit into number of years of purchase price. What is super profit here now? 4,000. Number of years of purchase price is what? 5 years. 4,000 into 5, we are getting what? 20,000. Now, in the same manner, let us calculate goodwill under annuity method. We have discussed already, right? How to calculate goodwill under annuity method? Goodwill is equal to super profit into present value of annuity. So, present value of annuity given the problem for rupee 3.78, right? You can observe here, children. Annuity of super profits taking the present value of an annuity of 1 rupee for 5 years at 10% interest is 3.78, right? Now, so 4,000 to 3.78, we are getting 15,000 what? 120. This is how we calculate goodwill under annuity method. So, let me discuss problem number 2 under the same method. The net profit of Mahesh Limited after providing for taxation for the first 5 years are rupees 80,000, 85,000, 92,000, 1,13,000 and rupees 1,10,000. The capital employed in the business is 8 lakh. The normal rate of return expected in this type of business is 10%. Calculate the value of goodwill on the basis of A, 5 years purchase of super profit, and B, annuity method taking the present value of annuity of rupees 1 for 5 years at 10% as 3.78. Now let us calculate goodwill under super profit method. Yes, step number 1, calculation of average capital employed. So what is average capital employed? Average capital employed means I can say taking all your what? Assets minus what? Liabilities. Assets means increase of both fixed assets and current assets. Then liabilities means I can say including your I can say what long-term liabilities, maybe in the form of I can say debentures, etc. Okay. Now, from the total assets, if we deduct what external liabilities, we are getting what capital employed. From the capital employed, if we deduct what half of current year's profit, we are getting what average capital employed. See, in this problem, no need to, I can say what, calculate average capital employed. The reason being, average capital employed is given in the problem itself. The capital employed in the business is rupees 8 lakh, right? Step number 2, calculation of normal profit. How to calculate normal profit? Normal profit is equal to average capital employed into normal rate of return. Normal profit is equal to average capital employed into normal rate of return. What is your average capital employed? 8 lakh. What is your normal rate of return? That is 10%. I repeat, average capital employed 8 lakh. Normal rate of return 10%. 8 lakh into 10 by 100. So normal profit is equal to 80,000. Next, step number 3, calculation of adjusted average profit. Right? So average profit is equal to total profit divided by number of years. See, we are using adjusted average profit. Why? in case, if at all, if we come across any non-recurring income in a particular year, right? In such a case, we must deduct it. In this case, there is no non-recurring income. The question of deducting any non-recurring income will not arise in this problem. Therefore, we sum up all the year's profit, 80,000 plus 85,000 plus 92,000 plus 1,10,000 divided by 5. Sorry, this missing here, 5. So, adjusted average profit is equal to 96,000. Then we are calculating super profit. So, what is super profit? Adjusted average profit. How much we got? 96,000. What is the normal profit here now? 80,000. Super profit will be 16,000. Calculation of goodwill. A under super profit method, 5 years purchase of super profit. Goodwill is equal to super profit into number of years of purchase. Goodwill is equal to super profit is what? 16,000. Computed already here now. 96,000 minus 80,000. 96,000 is your what? Adjusted average profit. 80,000 is your what? Normal profit. 96,000 minus 80,000. 16,000. 16,000 to 5. 80,000. Goodwill is 80,000. Then under annuity method. So what's the present value effect given the problem at 10%? 3.78. Goodwill is equal to super profit into annuity value, right? So 16,000 into 3.78. Goodwill is equal to 60,480. This is about calculation of goodwill under annuity method. Thank you, children.